Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pullback on the monthly Bitcoin chart. And last episode, I did forget that we were having a monthly close today, as well as the weekly and the daily, of course. So, sorry about that. That was my mistake. And usually we should expect a little bit of a pullback when we have, even a bullish close on almost any candle. And what you can see on the chart today was that there was a lot of pullback just because, of course, that monthly close should retract somewhat. And I was talking about this kind of an issue in the Alpha Commission Discord, where I mentioned yesterday that I'd be remiss not to mention the possible Bitcoin fractal that we could see playing out. Now, I mentioned this a few weeks ago in the Discord, and it's been playing out strongly, but I personally don't like to be guided by fractals alone. So I understand it can change at any time, but just as a reminder, and then I show the fractal. Where we basically had the same setup as previous, and I'm showing it on the 8-hour chart, where we could have a pullback all the way back to 26,000 even, essentially that 8-hour 300 EMA that we used as support during the USDC crash, about a month or so ago. Guys, again, I'm not 100% putting, everything into this kind of fractal. I just don't want to trade that way. And since we've been so bullish, it just it pains me to think that we're just going to slam down the way that we did during that kind of banking crisis, that kind of USDC crisis. It just doesn't feel right. In fact, I feel like the Bitcoin chart is getting ready to have a small parabolic phase where sooner than later, and probably definitely within May, that we're likely to push past 35K, maybe even to 42K or perhaps even 50K. And that's just my gut feeling on it. And so my gut feeling, based upon a lot of indications, is just in contradiction with us just falling off of a cliff. However, I did mention several weeks ago and also yesterday in the Discord. So there is some benefit to subscribing to the Discord and being part of the group. You can get my daily analysis there and some extra thoughts that I don't put into the YouTube or that I forget while talking on the YouTube. And so, yeah. Guys, the link is in the description of the video below. But other than that, I think we can take a look just at the Bitcoin chart here on the monthly, and you can see that we did have a very small candle on this monthly close, and that should have been a good hint that we were likely to get some type of a pullback almost right away, as the day ended, because of course that would suggest that momentum is starting to slow. And with that slowing momentum, you often just get a stronger pullback, right? Um, that's what we're seeing on the chart here, and I really can see that there is the possibility to pull back all the way to the new neutral point of control of the new one for May, which is at 27,833. That approximately lines up with the 21 EMA on the monthly, and then it would also be quite reasonable to get in here where there's that 35 and the 4, somewhere around 27. And really, I would think that kind of a last resort would be 26,000, let's just say 250, and definitely no lower than that 25,300 where we currently see the 50 EMA. Of course, we're still going to have a reading of a monthly general continuation to the upside as long as we're above 24,550. So even a wick as low as that, it really wouldn't change the game. We do have this liquidity on the monthly over here, and just the midline of that does line up with our additive and subtractive momentum line. So 26,000, 250-ish, I would say, is something that market makers could stretch for if they just want to shoot this thing straight up. They just want to grab some real liquidity out of this market. Then they could definitely drop as low as that and then just keep going. Now, could it drop lower? Yeah, let's go ahead and take a look at some other charts just to give some consideration to it. By the way, I will say that we are coming out of a nice squeeze play here between the 10 and the 20 essentially on the monthly. I use the 9 and the 21, and we're just basically back testing the 20 right now. And so if we do hold that, that does look very bullish. So again, just as long as we're in this alpha momentum pool on the monthly, I don't feel bearish about this chart. We start to break under that, especially under this monthly continuation at 24.5, then I would get a bit freaked out. I would really, 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 really like to see us hold above 26,250, guys. Okay, but yeah, let's go ahead and just jump over to the let's go ahead and take a look at, let's just do the 6 hour, okay? So we've got a good look at the monthly, but the 6 hour also needs to be updated. And what you can see just right away is what happened, right? So what happened that just dumped us? Well, of course we had a lot of push up here, so there is a lot of, stop losses and things. And, market makers may just want to, trigger the stop losses of all these people who were going long. Last episode, I was very bullish, and I think a lot of people would be very bullish when you're seeing this type of a pump after after all of this bullish momentum to the upside. And so if the market makers just want to just take out everyone's stop loss, right? They want to just liquidate everyone who's on leverage to the long side. Well, then a candle like this would easily do that. And then we could even just continue on our way. So I don't necessarily think that we have to have more downside, but because this would be a very typical behavior. But usually when a drive of when a drive is this sharp to the downside, usually I see two pushes or kind of a second wave. So I don't this was a little bit of a rumor issue. This was something else going on in the market, but usually we have a couple big drives down. Now we could say that this was the first drive that just kind of reclaimed this candle completely, and then this maybe was the second drive, and maybe we are done. But I just think that perhaps there's one more drive that's going to show us slowing momentum, and then we can turn around. And we can see the same thing happened over here, right? Then we had just a couple drives down. It's not just like one candle, it's a couple drives down, and then you start making a little bit of a shallow base. You get stronger wicks, and then you push back up. Same thing happened over here. So this is a very regular phenomenon. This isn't anything weird that's going on. This is actually bullish. You can tell this chart just continued to push up every time it had those type of drops. It just continued to push up. It just suggested that if you are going to stay bullish, that maybe it's going to take a little bit longer. It's not going to be the direct pop-up that we were hoping for. It's maybe going to take a little bit longer. Maybe instead of this cup and handle, maybe we're going to put in something like maybe like an accumulation wedge or something, right? Like something like this. And maybe we just end up chopping it out, grinding it out, and then going. Okay, that's also a possibility. Um, could this entire structure here just be invalidated and we just go down? Yeah, that's also possible. We've done that before as well. Again, back here, right? Just popped up, started to push up again, and then it got invalidated, and then we've just kept pushing down until essentially, we hit these longer term EMAs here. So, on this 6 hour chart, that would be something like 26.5, roughly 25,000, and then as low as 21,000, right? Like that would be a hard limit for me. If we break 21,000, I'm not sure that I would be bullish on this anymore. And again, I would strongly prefer to stay above 26,000, guys. Let's go ahead and just take a look at what levels that I did have here, even though we're talking about price action right now. Um, yeah, I mean, we just broke completely down. Okay, so we lost the alpha momentum pool, which we'll re-enter if we get above that 29,250 area. We broke the RSI, okay, in half. Like we're on the negative side of the RSI. We just cut straight through it, guys. I mean, I would expect a bounce there. Okay, normally some type of reaction. We didn't get any reaction. They just pushed this thing straight down, and that's been kind of the modus operandi lately of these market makers. They've just been very cutting on the way down. Okay, so just watch out for that. Um, yeah, we just blow through the neutral point of control at 20, which is now at 28,990. And but the good thing is that we haven't really put bears in control yet, which they don't get that control unless they break under 28,000. Where on the 6 hour here, you can see the 200 SMA and the 200 EMA. Now that's going to be a tough nut to crack, okay? And you can see that when they pushed down the other day, it came right down to those EMAs. They weren't able to break through it. You see this push down here, they weren't able to break through those EMAs on the 6 hour. We've been hanging out above the 200s on the 6 hour for a long time, and only the USDC crisis, right, where everyone thought like, the banking and the USDC, all this stuff was going to break down, and they were just freaking out. And even at the bottom of the market, okay, like here at 16.5, 17,000, that's really what launched us off of 16.5, basically the 200 SMA, and 17,000, the 200 EMA on the 6 hour chart. So our entire run up here has been on the 200, the 200s on the 6 hour. And that's why I would suggest that if we do have another drive down, I just prefer that it doesn't lose this area. That would be bullish to me. That would suggest just bullish continuation if we're able to bounce off this area and not get bears in control on the 6 hour, not under that 28,000. But should we dip down for liquidity? Again, we have the 300 EMAs on the 6 hour here in that 26,500 area, that $26,000 area. And then as a backup, we even have these longer term EMAs. So just going to take a look at, this type of an assessment all the way down to a 21,000 where again, I would just give up pretty much that bullish perspective. I would think this thing would be just breaking down under that area. I guess technically we could go as low as 19,600-ish, right? And it would just be kind of an equal bottom to this one. But you don't want to be playing around in this area. Let's see here. Yeah, let's go ahead and just go to the daily. And the daily is going to show us, something very similar, but you are going to see that we are holding on to the daily volatility pivot. So this could be a little bit of a clue that we didn't violate the daily volatility pivot. And as long as we hold on to that, I just can't be too bearish. Even on just a daily basis. Yes, we had a little bit of a pullback. Yes, we have this kind of ugly candle here. Yes, we have a very ugly fractal, but the day still has a bit of a bias to the upside in the sense that this candle is hanging out at the neutral point of control and the volatility pivot is underneath us. What that means is that this thing could easily just flip around, okay? Like this thing doesn't have to continue to break down as long as it's holding the neutral point of control and as long as volatility is at our back. Where I would start to flip, officially bearish is if we're closing candles underneath the neutral point of control, which currently is at 28,585. And then of course, if we get underneath that daily volatility pivot, which is currently at 28,180, And then I would suggest, yeah, maybe we're going to take a swim down to 26,500 perhaps even. And, that could get a little bit scary for some people, depending on what your position is in the market. None of this is too unexpected. Again, we're really just talking about one candle, at the open of a new month, at the open of a new week, right? At the open of a new day, which hasn't even retraced 50% of the move that we made less than 1 week ago, right? So this is still, in the aggregate, it's still pretty bullish. Like if I put the 2 week, if I put the 2 week chart on, you can see that, that doesn't look bearish. This is engulfing the candle next to it. And if we hang out, above 28,300 for the next, for this week, or find our way above that, we're still going to be, essentially engulfing the previous candle. And let's just see for the week. For the week, yeah, I mean, this isn't the strongest look or anything, but it's not terrible at all. We just came back to check the 9 EMA over here. Is it possible that we come all the way down and check the 21 EMA or the 200s, somewhere around 26,000, 25,000-ish? Yeah, it is possible. Or we could just be checking, the 4 EMA just right here and gonna get a little bounce. We just don't know yet. We just don't know yet. Let's see if we can just take a look at some of that volatility on the weekly. This is kind of interesting because on the weekly here, we did have this entire push up while this thing was kind of contracting down, and this thing doesn't look like it's done contracting. So I don't see any indication of a flip. I mean, if this thing just continues to contract, it could continue to contract to the upside. So maybe this is just a temporary pullback, but we're going to have to wait and see for that. For the daily, I mean, the daily is getting a strong pullback, and that one doesn't look done either, so a little bit of a contradiction there. The Stokes on the daily, as I mentioned, is still pointed up, that kind of volatility indication. And so it's just interesting that the daily suggests more contraction to the downside, and its Stokes is pointed up, but the weekly suggests more contraction to the upside in price action, but its Stoke is pointed down. So a little bit of confusion on the charts here. We do have kind of an ugly potential cross coming up on the ADX. The DIs over here are looking to potentially cross negative, and that could just send us down lower. We are getting a little bit of a rounding on the jewel here, but still pointed up. Yeah, so the daily, just a little bit of a mixed message here, not really the cleanest signal or anything. Go back to the weekly really quick. Yeah, the weekly is breaking down from the bullish control zone. And also it's suggesting perhaps a pullback on the jewel. Just the bullishness is kind of softening on the ADX. Let's see the 6 hour. The 6 hour is very interesting because we had this push up in the chart while volatility was expanding, just sideways action while it was contracting, and now it seems to be pushing up in the downward direction. So that's not good in my mind. Okay, the 6 hour is telling me there's potentially more expansion in price action to the downside before this is all over. The Stokes is pointed down. The Joule is turning negative. And as I mentioned, we lost the the center of the RSI. We've lost basically the neutral point of control. And then also, wow, this ADX negative DI is just pointed like straight up, and the ADX is continuing to increase. It's softening right now, but it's overall increasing in strength, suggesting that negative push is pretty real. Okay, so yeah, the 6 hour does seem to be in control here. And we're just going to want to see how this thing plays out, okay? Because we don't want to have a permanent bias one direction or another. I am bullish, but I am also open-minded that that fractal could be playing out. And if this fractal is playing out and we are going to grab some of that liquidity, there's some over here. There's a bunch of liquidity in these candles from that huge push up. There's a lot of stop losses in this area that could be just, liquidated and be used as fuel to push to the upside. It is possible to get this type of a hook on the way down. So, yeah, that's what I'm seeing right now. Sometimes it's better to just take your profits, when you are in profit. We did get that nice move that we were looking for. In fact, it exceeded expectations, right? So we had on the 1 hour here, we did have that broadening descending wedge, basically right here. And then we essentially had a target up here for the breakout. Okay, so we all should have, taken our profit off of that move. We got a little bit extra in this wick, but then we ended up essentially double topping or even triple topping with this area over here. And anyway, on a candle close basis, this is a lower high from this one, which is also a lower high from this one, which is also a lower high from this one, which is also a lower high from this one, which is a lower high from this one. And so, if we just look at this, hourly trend over this huge period of time, it's just bearish, 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 bearish. And then, of course, this breakdown was just bearish. You can see on the 1 hour, we do have some liquidity up here. It is possible we pop up and then continue to push down. But yeah, overall, I think my bias is towards a second push to the downside, maybe a little bit of pop up and then a second push to the downside. And then we're going to have to measure it again. Okay, so I'm just not confident that we're going to straight away bounce from this. I don't think it's just a liquidation event for this little area. It may be a deeper one. Just going to have to continue to watch it. But yeah, I mean, we got this play here to the upside. We got this play here to the upside. Uh, I wasn't expecting this breakdown, but should we have broken that support to the downside, that would have been a shorting opportunity. As soon as you took out these local lows here, you could have made that play. But that's not something that I was set up for. Guys, I hope you are all safe and sound and that you do take your profits regularly. Again, you don't have to be loyal to these coins. They're not going to be loyal to you. Always take your profit in a downtrend. Put food on your table, guys. Don't be perma bulls. Don't be perma bears. Just be clever little alpha monkeys. And that's your alpha for the day. Stay safe and happy trading.